We are prolific users of Twitter. ARC gives away its research. We give away our research not when it's finished, but as it's evolving. And our most prolific platform, social platform out there, is Twitter. I'm kind of excited to see what Elon will do. I actually think he'll work closely with Jack Dorsey and maybe open up the ecosystem, take away the censorship, make it much more transparent, and I think add more value to that ecosystem.
ARK Invest founder and CEO Cathie Wood is excited about Elon Musk's Twitter deal because she believes the billionaire will bring much value to the social media platform. Wood, who spent $32 million on Tesla shares earlier in the month, is also excited about the future of the multinational automotive and clean energy company. In a recent interview with Yahoo Finance, the renowned investor and hedge fund manager discusses the increasing demand for important innovations like Tesla's electric vehicles as the world battles a climate crisis and massive food and energy shortages. She states that the ARK Invest team believes that gas-powered vehicles will be obsolete within the next 5 to 10 years, and Tesla is an industry leader in the next phase of development for the auto industry. We will now take you to Cathie Wood's interview as the renowned investor discusses Tesla, Elon Musk's Twitter deal, and ARK Invest's short and mid-term focus. Please watch the video to the end, hit the like button, and subscribe to the channel if you are yet to do so. Also, ensure you drop your comments and observations about Wood's interview in the comments section below. Everything helps with the YouTube algorithm, so we can continue to bring you these videos. Thanks and enjoy the video.
All stocks are experiencing difficulty in this environment as the market tries to understand how far the Fed is going to go and how deep this recession is going to be. So Tesla, as I mentioned, is a solution to the problem. It's very interesting. If you look at gasoline demand this summer in the United States, it dropped below COVID levels, the worst of COVID, and it dropped to levels that we have not seen since 1997. That's real demand destruction. And it couldn't have happened, we do not believe, without electric vehicles at the margin taking huge share from traditional automobiles. So if we had to be concerned about an industry, it would be the traditional auto industry. We think that gas-powered vehicles are going to be obsolete within the next 5 to 10 years. And the traditional auto industry has to figure out a way to migrate into electric vehicles and into the next big phase, which we think Tesla is leading, the autonomous taxi platform phase. So lots of changes here. Traditional industries are in harm's way as innovation pushes through, accelerated by some of the turmoil out there. We are prolific users of Twitter. ARK gives away its research. We give away our research not when it's finished, but as it's evolving. And our most prolific platform, social platform out there, is Twitter. I'm kind of excited to see what Elon will do. I actually think he'll work closely with Jack Dorsey and maybe open up the ecosystem, take away the censorship, make it much more transparent, and I think add more value to that ecosystem.
You don't think that it'll be a mess if that happens? That it'll just be sort of a free-for-all where it's tougher to find commentary of value?
You know what's interesting about Twitter, and we found this, we have a lot of debate around ARK's own strategies. We can filter that debate ourselves. So we can unfollow people if we think there's bad behavior, but that's our choice. And we can follow those people who we think are moving discussions, whether it's about innovation or the economy, moving discussions along. So I think there's a lot of wisdom out there, and we're kind of sick of the nonsense that we see on some of these social platforms. And Twitter, I think, is going to give us more tools to filter out the nonsense and get right down to business.
Tesla is not the only growth opportunity that Wood and her team are looking at in the long term. Despite the ongoing bear market, Wood believes truly innovative stocks and companies are really about to take off. However, according to her, these technologies are badly represented in the U.S. stock markets. Instead of the usual focus on benchmark stocks, Wood believes ARK Invest's disruptive innovation stocks bring something fresh and promising to investors. Please listen as she discusses this, as well as the firm's 5-year time horizon.
One thing that helps our clients is our research, and they see that it's first principles research. We have the long-term time horizon, and we're seeing spectacular exponential growth opportunities. And not only one by one, the various platforms I just described, but the convergence of those platforms. So one S-curve feeding another. And I think many of our clients understand that they're short innovation, truly disruptive innovation. If you own the NASDAQ or the NASDAQ 100 right now, and you look through that index, this is not the index that I grew up with. In the 80s and 90s, when we were looking for innovation, we'd go to the NASDAQ. But if you look through the NASDAQ now, and especially the NASDAQ 100, what you see are 25% of the names touching disruptive innovation. The rest of them are kind of me too. They look like other indexes, the FANGs, Microsoft, NVIDIA, Tesla would be our only overlap. And then you look further and more deeply into these indices, and you see names that you'd never expect to be there. Food and beverage, utilities, rails, brick and mortar retail. These are not innovation companies. And so what we've done at ARK is we are pure play innovation. And we'd like to think we are what the NASDAQ used to be in the 80s and 90s. And it used to be a very productive place to invest with a long-term investment time horizon. So I think our sharing our research and our pointing out to investors, look, what you think you own in innovation is not what it used to be. And what ARK is doing is really back to the future. We're all about investing in the future as opposed to indexes, which are more about past success. Those companies that have been extremely successful have risen to the top of these indexes. But if we're right, in these 5 platforms that involve 14 different technologies are going to disrupt the traditional world order, then investors need to get to the right side of change. And one of the other things that we do, it's one of our missions and values, is to educate. That's why we give our research away. And we want to educate not only investors, but parents and grandparents about how the world is changing, how radically it's changing, and how it's ever more important to get especially students on the right side of change so that they can enjoy these incredible growth opportunities and not be disrupted by industries that will be sunsetting, shall I say.
And so, at ARK, how do you go about identifying disruptive innovation that then doesn't get disrupted by public policy or political agenda?
Well, we have a 6-metric scoring system, very much focused on innovation. One of the scores is thesis risk. Thesis risk has a lot to do with government policy. And so in the early days of ARK in 2014-15, we were thinking, okay, government may be very concerned about the safety of autonomous vehicles. But as we've moved through these last 8 years, what we've seen, thankfully, is the government and regulators in particular very focused on data. And what does the data say? The data says that most fatalities and accidents, 85, almost 90% of them, are caused by human error. If we take the human being out of the equation, then we're going to save up to 35, 40,000 lives in the United States, the fatalities per year, and up to 1.25 million around the world. So that is a noble goal. And we've been very gratified to see the regulators looking at the fatalities in Tesla's vehicles and informing us that for the most part, most of those fatalities were caused by human error. And for the second, that people who are driving Tesla vehicles are much safer thanks to the various automated driving capabilities now, up to 40% safer than in most other cars. So we're very focused on what governments are studying in terms of the data. And if they stick to the data, innovation typically it solves problems and makes the world a better place.
Earlier in the month, ARK Invest bought up more than $32 million worth of Tesla shares after the electric vehicle maker's shares dropped to their lowest level in 11 weeks. According to the transaction reports, two of ARK's funds bought a combined 132,213 shares of Tesla for about $32 million. Before the purchase, Tesla announced that it delivered 343,000 vehicles during the year's third quarter. Though it was a record from the 241,300 vehicles it delivered last year, it still fell short of analysts' expectations of around 365,000 deliveries. Following the report, Tesla shares dropped by 8.6% to their lowest level since July, and Cathie Wood swapped down to buy the dip. With the latest purchase, ARK's flagship fund, ARK Innovation ETF, now holds over 3 million Tesla shares worth around $739 million. 10% of the fund's assets are now allocated to Tesla, while Zoom and Roku have 8 and 7% respectively. Though the fund has lost over 60% of its price this year, ARK Invest continues to receive significant inflows from investors. The investment management firm has recorded over $480 million in net inflows in the past 2 weeks and $956 million over the past 12 months. What are your thoughts on Cathie Wood's interview on ARK, Tesla, and Elon Musk's Twitter deal? Please drop your comments and observations in the comments section below. Also, ensure you hit the like button, subscribe to the channel, and check out our other videos featuring interviews from the brightest minds in the financial world. Thanks for watching.